Welcome back, everybody. Have you ever thought you'd be seeing a video about dividends and Tesla at the same time? Well, today's Saturday, so that means it's my weekly review where I go over all the trades I did for the week. But this time we got some bonus content and we talk about the dividend stocks that I have and how they're doing now that the month of January is done. And then I'm going to be talking a little bit more about the short-term zebra plays I've been putting on. Some of you have seen me do these in the Discord, so I'll go over my trades and what I did to put those on, and then I'll pull up Thinkorswim, show you what the P&L looks like on these to make you understand why I'm actually using these instead of some other options. And I'll even show you how I quickly put them on in interactive brokers as well, so you can see like I can make a heartbeat decision and know what strikes to put on quickly. So first off, let's go ahead and look at the daily close snapshots. And as you can see, Monday was a pretty good day for me. I was up 3,000. I even realized $241. Tuesday, another green day. Wednesday, made some Tesla trades, made $1,200. And then for the day, I was up 3,600. Thursday, I was down, even though I made another 1,500 in realized profits. And then Friday was really good. I had a Tesla trade go really well for me and locked in 4,700. And the daily, it was 5,520. So let's go ahead and look at the tracker sheet here. At close on Friday, my account was at 211,600. That's an $11,000 increase from Friday of close of last week, and that's a 5.28% increase. Total year-to-date change for my net account value is 22,406, and I'm up 18.86% on the year, which is pretty cool given the fact that when I was setting up my goals for 2022, I was only estimating a 15% return, and I've already passed that. My goal for 2022 was to get to 217, and I'm a fart in the wind away from getting there. And like I'm pretty excited, but at the same time, I feel like I've pressured myself into trying to make it happen quicker. Like I try to be as efficient as I can. I'm trying to hit that goal a lot quicker than I need to. So that's why I try not to set goals, but because I did, I think I'm feeling a little more motivated to be active in the market. And I guess right now it's paying off, but we'll see how this goes. Maybe this 225 might be an actual realistic goal for 2022. And I haven't deposited anything yet, so this is all just returns so far. So that's pretty cool. Premium realized, you can see in January we ended up with $34,136. February we have 4 days in the books, and I've realized $7,298 from options income. I also now have a dividend tracker on here as well that I have to fill out. So January collected $1,243 in dividends, and then already got a dividend payout from one of our stocks this time around for February. So another $295 of just passive income, whereas last year all that was just sitting in cash in my account. Now it's actually paying a dividend. Although I will say, like right now, it sure does seem like those positions are a drag on the portfolio because they're all down like 8%. So yeah, I made 1,500, or I guess right here it's calculated $1,538 so far from dividends, but they've lost enough value that's like $10,000 lost. But I'm still pretty excited about the whole dividend income generation thing. So, speaking of that, let's go ahead and just go right to the dividends, I guess. So I made a new sheet to track all this stuff, and I just put them all. This might not be the best method to track them, and in fact, it's actually kind of annoying because in interactive brokers right now I have to look at 2 different reports to get the information to put into the spreadsheet. Maybe I can make a custom report later to do that in one sheet and have it emailed to me, but I haven't done that yet. And it's pretty simple. I mean, looking at shares, put in the dividend that's paid, how much you got paid. This is the share price of what was being bought when it was being dripped back in. Drip just means you're taking that income from the dividend and using it to buy shares to add to the position. So in Jeppy, we made $128, and that dripped 2 shares. And then this is just saying how much more income I'll have in the next month from having purchased that many shares. So in this case, if the dividend stays where it is, my income for the month increased by $1. Like it's just kind of a fun metric I like. I don't know. KYLD We actually have 2 months already in here because pay date was February 1st for QYLD, so that already hit the account. And you can see I dripped 17 shares, increased the income by $7.82. I mean, that's the allure to QYLD, is the high yield, and the potential to just keep buying more shares and increasing that. But you do give up in growth, which is why you have Jeppy and Devo to capture growth instead of just going for straight yield. Nusi, $508 dividend, which dripped 19 shares. Devo got $100, that dripped 2 shares. And then MFA, this is probably one of my favorite positions in my portfolio. I know, like, you're not supposed to get emotionally connected to like a position, but this one has like a special place in my heart. But MFA dripped another 25 shares, and this one only pays quarterly, so this will only have a thing come up every 4 months. Now, MFA is a position I bought 1,000 shares originally at a cost basis of $1.11, and I sold covered calls against it. I think I collected overall $1.50 per share, so it's actually like a negative 38-cent cost basis, which is really cool. So this literally feels like free money to me, and I'll probably never sell this position and just collect that dividend. When I bought the shares, the dividend was actually cut at that time, which is why it dropped down to $1.11. And they reinstated their dividend, and they've been increasing it as well, so that's been pretty cool. And it's just kind of neat that over the course of 2 years, basically I get my entire cost basis back from the stock. So that's just awesome. Anyway, on the left here, you can see the total dividend income I had, and then the income increase that all the drip shares have increased the income for the future. So after January, that increased by $15. So this is what I'm going to be using for now to track this. I just thought it was pretty neat. If we go to the dividend sheet from Interactive Brokers, you can see the numbers line up just the way I showed you. I do like this little chart here that shows like the individual positions and how much they contributed to your total dividend. And then for projected income, maybe I have to move my head to the side here. You can see projected to have about $12,300 more to come in 2022. And again, here's their projected income sheet. It assumes you have the same dividend going out throughout the rest of the year. So when QILD did that massive payout for like the beginning of January, that kind of threw off all their calculations. So I think before I did a video and I was like, "Whoa, I got 16K coming in, what?" And that's why, because QRD was completely messed up because of that massive dividend. Going back here, let's go to premium cooking. I finally have some more theta on that can burn and cook over time. I must have forgot to close a position on the spreadsheet, but about $2,000 here on premium cooking. The diversification page, my notional risk is 69,000, and my calculations say I want to keep it at around 7,600, or sorry, 76,000. So I'm still below that, which is awesome. And you can see I did put on a new position, Zoom Poor Man's Covered Call, and I'll talk about that when I look at the trade log, which I guess we'll do right now. I just pull it up in my broker because I have nothing to hide here. Looks like we went down a little bit after market too, so it went down a couple hundred there. Actually, that's about 1,000. Shoot. Anyway, new window trade log. So the trades we put on. So I did that video about SPY, how you can do an at the money wheel and with it. Although I'm not doing at the money wheels, I decided to sell a 30 delta put on SPY. This was actually up to like 60% profit at some time during the week. I probably should have closed it, but I decided to just leave it on anyway. And I think that's actually up still like 30% or something like that. I also closed my Netflix put that I put on Friday, so 1 day hold for $241. That was again pretty easy. Then we had some shares get dripped, 19 to 25. Google announced that 20-to-1 split, and so after market on Tuesday, I went ahead and picked up 5 shares. Think I could sell it pre-market for a gain. I got a little greedy and didn't sell when it got to 30.60, but on the way back down, I did close out for a small gain. Although I could have made like an extra 100 if I wasn't being too greedy with that one. So I did get some real life stock gains, which I don't track in my options spreadsheet. So add $132 to whatever I said the total was before. I think it was like $7,600 for the week. And then Tesla over here, I decided to bet against it. If you see me put like a put on here, that means I'm betting that Tesla goes down when I'm running these zebras. And I'm going to expand this position so you can see what I did. I sold the 920, and then I bought two in the money puts 950. And we'll look at the P&Ls for these when I pull up Thinkorswim. But basically what it's doing is it's simulating being short 100 stocks or 100 shares of the stock. And it has a max defined loss, and theta does not affect it at all, so you're not running against the clock here. And that's basically why I like the zebras, because I can make quick price action plays, I guess you can call it, and not have to worry about theta eating away at any potential gains or worry about IV regression or expansion, anything like that. So if you see a put, that means I went short the stock, and the first number is about where the stock was sitting at, because you sell at the money. So Tesla was trading at about 920 when I put this on, and it looks like I may have bought a second one. So I guess Tesla went up a little bit, but SPY and the Qs were looking weak, so I decided to go ahead and double down. And then eventually Tesla went down, and I was able to close it for a $1,000 gain. Then on Wednesday, we had our dividend drip for QYLD, and we played Tesla again. So I started with, I think it's actually out of order here. No, it is. Okay. So Tesla, I woke up and I wanted to play Tesla down again, except the market was showing some strength. Tesla was showing some strength, so I decided to instead follow that trend that's happening. And I went bullish on Tesla at the beginning of the market day, and it went up, hit resistance. I closed the position, $430 gains, and that trade has lasted for like 5 minutes. Like 5 minutes, $430. Like, that's the power of these zebras. And then, since it was at that resistance, I decided, you know what? Let's ride her down. So I bought the bear put zebra on Tesla. And again, rather quickly, that went up. Every dollar moved in your direction, you make $100. So this saying I made 1,100 means it moved $11 in my favor before I close it. Or IV expanded. Like, IV expansion could help you. Just there's not any extrinsic value on these for IV regression to hurt you. So as it's going down, the puts tend to print quicker because as the stocks go down, volatility increases, which also increases the prices of these zebras if you're betting down. So that's pretty nice. And then Friday, Tesla was trading at 885, and I wanted to go bull because SPY was showing a lot of strength. There's a lot of strength overall in the market at the beginning. So I bought a zebra. I kind of chased a little bit. I probably could have got a better fill other than 3120. Tesla just kind of stayed where it was, and the price of the contract went down. And I was still seeing strength from everything else, so I decided to buy another one. And then Tesla actually went down to about 280, but yet everything else was just still showing a lot of strength. And so I decided to buy two more because 2,000. There's another Discord I was in, and I was actually talking about this play. Like, I'm ready to spend 10K at a bullish position on Tesla today. And I told them I think it could hit 920. I'll be looking to get out at 915 to 920. And sure enough, it did go past all that stuff. And it was just kind of neat that I actually stuck with what I said. Like, I had 10K set aside, ready to go for this. I ended up getting like 8K deep on this. And then eventually Tesla just kept testing 205 and getting rejected. And like, I held it. So I saw this go up to like 3,600. Oh, back down to negative 500. 3,200? Negative 1,700. Like, I kept going back up to 904, 905 and kept getting rejected. But everything else at that time was still showing me strength. Like, I think this is going to work. And then the last time I got to 905 in the morning, it seemed like the rest of the market just decided to like stop and shake, and SPY was showing a little bit of weakness. So I decided, you know what, I'll finally just lock this in, get out. So I ended up closing this when Tesla was at 905. And this was literally like if you look at like the 5-minute candles, like this is right before that giant peak up to 9, 10, or 13, whatever it got to in the morning. So whatever, that's how this one worked out. About 8,000 wrist and made almost 5,000 off that. And then later in the day, I did buy a leap on Zoom. I think it's trading near 52-week lows, like, and those are pandemic lows when it did the March dip. So I think it's a decent time to buy a leap on it. And the call for 155 was given $1,000. So I immediately sold the covered call on that leap to make back some of that credit and potentially just do that for a while. Now, I'd be fine if Zoom does shoot up and gets past 155 here, and I'll close this whole trade down for a profit. Like, that's the whole point of this trade, because the losses beyond that would be canceled out by the leap, and my net profit should be a little bit around $1,060 if the upper side gets breached. Maybe a little bit more than that, but that's like kind of like the minimum if my short call gets breached. And if Zoom trends down, well, then I just lower the cost basis of this leap by, what is that, 10%? Oh, sorry, 20%. Okay. Now, when I'm looking at these trades, I'm deciding to get in on these. So I usually have Thinkorswim open, looking at their charts, because I just like them better than the Interactive Broker ones. But you can probably do it all in Interactive Brokers. But you get to quickly see like what the strikes are that you want to put on in order to put this trade on. The goal is to have 0 extrinsic value when you put on this trade. So then what I'm looking at is the time value column, and you know you're doing at the money, the first one out of the money, and you're going to go ahead and sell this guy. So that's automatic, you know what you're doing here. Click sell. I have the strategy builder on when I do this. And I look at the time value column, and over here it might say -15. So this has $1,500 worth of extrinsic value that's going to burn off over time. What you want to do is find half of that number up here and buy 2 of those contracts. So if this was 15, I'd look for a 750, click buy, then change this to a 2, and then put in my limit price of however much I want to pay. And ideally, you're not going much above mid here, because if you go higher, then you are getting some extrinsic value that you're buying that'll burn off more than what you're getting from the burn off here. So that's how I'm putting those on quickly in Interactive Broker. All right, so we're looking at the Thinkorswim platform here, looking at Tesla. And when I'm using these like quick plays, where I'm just looking for a quick movement to get in and out, I'll look at the same date of expiration, maybe 1 week out. If I want to have more time, just let it sit there. But if I'm playing Tesla, I'm in and out. Like, I'll take my losses pretty quickly if I need to. So say I want to go bull on Tesla right here. What I would do is sell at the money call here. And then I'm looking at the extrinsic column here. And this says 51. What I want to do is then buy 2 in the money calls that are about 26 or 21. That's half of whatever this is. So 25. Well, sometimes you don't get exact. Looks like we'll be buying 2 of those. So in this case, it's actually going to be quite expensive option to put on. So that's a lot to put on for this kind of P&L. So I'll probably actually pass on this one. But let's go ahead and look at the risk profile just to show you what it looks like. So Tesla was currently at 888. So here's 888. If Tesla moves $1 in my favor, you can see I make $100 as that number just goes up. Every dollar moves for you, you make $100. Why is this on 210? Let's change this real quick. Sorry, put this on 2. All right, that's better. So the pink line is how much you're losing if it moves against you before expiration. The blue line here is at expiration, and so you can see the second it moves $1 in your favor, you make $100. $2 in your favor, you make $200. So as we just keep moving up ever so slightly here on the bottom left corner, you can just see it move up rather quickly, how much money you make. And then if it goes against you, you have time to get out because you still be on this pink line here. So we're at 888. What if we got down to 870? We're only down 1,000 instead of like the whole thing. And even if we got to our max loss point here, 820, so we're really wrong. If we're out before the date of expiration, like we only lost 4,800 instead of 1,300. So the zebras lose slower if you go against you, as long as there's still time left on the contract. But no matter how much time is on the contract, a $1 movement will get you about $100 profit. I like these better than a buying an out of the money call, because the out of the money call, you're racing against time. Theta's eating away at that position. A deep in the money call, even, you have extrinsic value, so your break even will be higher than right where the stock starts at. So I just need a quick movement in my favor, and it's over. And that's basically why I like these Tesla ones, or these zebras when I'm putting them on. Like you just need a small movement in your favor briefly. Doesn't even have to be for long. You put your profit taker for how much you want to make and just take it. I'm also looking at like SPY, QQQ, and the market strength overall to help gauge the direction that I think Tesla's going to go. But I'm also playing like the Tesla support levels and volume profiles. So if I take this off demand real quick, like looking at Tesla in real time here, like this volume profile really shows you where Tesla's going to speed up or slow down. So Tesla had a lot of volume to get through if it's going to drop down, but the market was showing strength overall, so I was being bullish on her. And then just using these peaks here, like you can tell where it's going to have resistance. So 905, where it's been fighting at forever. That's obviously a peak. So, but once you get past that, that's when you can shoot up again. You can see like the next peak is at 922, 926, which is why I was looking for my profit taker to be taken out before that point. And depending on the timeline, the time frame that you're looking at, you'll see some slightly different ones. Like this one does show you 905 is a high volume area, and it was having difficulty getting up there. If you look at the chart today, like a 1 minute chart, it just kept hitting off that, and then the next peak, 915. Well, guess what? It struggled at 913, 915 again too. So like the smaller time frame held up a lot more accurately than the larger one. And eventually, here's 925. And again, what did we end at? Oh, 925. It's trading like right where these volume profiles are saying they should be trading at. That's why like the volume profile, huge asset to learn about. And it just helps you predict price action and where things might get stuck if they're going against you, or where they might gap up a little bit quicker, so there might be more profit potential if you do have movement in your favor. And I think that's going to wrap up this video, guys. I hope you enjoyed it. If you did, go ahead, subscribe, and I'll see you guys tomorrow.